Deepak Shenoy also joining us on the show. So let me take it across to him. Deepak, what's your thesis right now? Should one use these dips as a buying opportunity, even in the mid cap and small cap space, or let it grind lower, let the poison out of the system, and only then look at deploying?
So I think really the structure of the it's not like all small caps are bad or all small caps are falling. Even large caps, there are stocks like LIC which fell I think 4 or 5% yesterday, and now it's back up 5%. So I don't see that necessarily all such stocks which are small and mid cap will continue to fall. I think selectively speaking, you should definitely, where you have conviction, if you're buying on a fundamental basis, then yes, if you have conviction, then it's a good time to continue to add. As long as the fundamentals haven't changed. In some stocks, the fundamentals have. In some cases, there have been issues about certain large investors, say, being their accounts being frozen because of some inquiry and so on, which has kind of curbed liquidity in those stocks. So you might have to reanalyze whatever has happened. But outside of that, I would say, investing should be business as usual. This is how markets behave. This is how markets are. If they fall 4 or 5% in the small caps or 2 or 3% in the mid and the large caps, that should be normal course for the game. We've just been complacent. We've gotten complacent because the last year or so has been relatively benign. But this is how markets will give you opportunities to both buy and sell, upside and downside.
Okay, yeah, totally. I mean, this is business as usual, and the stress test that we are seeing in the mutual fund is also actually a stress test for you as the investor, whether you have the patience to deal with this or not. But time now to shift focus and bring Somit on board, because at least tomorrow there'll be that support coming in for flows as well, because FTSE rejig is expected to happen. Somit, what exactly will be the flow impact on account of that?
Well, it's not only FTSE rejig, but there are three rejigs, index rejigs that are expected to happen tomorrow: FTSE, Sensex, and Bharat 22. But of these three, it's FTSE that is most important, because that will lead to most amount of inflows in the market. In fact, to be precise, around 1.85 billion US dollars of inflows, net inflows are expected owing to this FTSE rejig. Now, stocks that are expected to see the highest inflow: HDFC Bank tops the list, around 458 million US dollars of inflows are expected, followed by ICICI Bank, which could see an inflow of close to 382 million US dollars. Apart from that, it's Sundaram Finance, Kotak Mahindra Bank, Suzlon Energy, KPIT Tech, and Phoenix Mill, which could see an inflow anywhere between 57 to 163 million US dollars, and this would be nearly 1.5 to 3 times that 20-day average volume. Now, for Sundaram Finance specifically, if you see, the inflows of close to 163 million US dollars is nearly 10 times that 20-day average volume. Now, apart from this, a few other stocks that one needs to watch out for on the back of volume actions, and that is New India Assurance, Thermax, TVS Holding, Lloyds Metal, and Supreme Petrochem. Now, inflows on these counters would be on the limited side, around 11, in fact around 10 to 34 million US dollars, but this would be nearly 7 to 15 times that 20-day average volume. So we could see that big jump in the share prices, or big bump in the volume on the back of these inflows that are expected owing to the FTSE rejig that is expected to happen tomorrow in trade.
Okay, point taken. So we'll wait by and see and wait for that rejigs to happen, not only FTSE but the other two indices as well. But just quickly taking stock of the markets. And Naresh, I want your view on a couple of these names. BLS International up 20%. You also have Shriram Pistons, which is reacting positively to that MK initiation, which talked about an upside of over 40%. And then the railway stocks are bouncing back today. Of course, all of them were under pressure yesterday. Within these 2-3 pockets, what stands out, Naresh?
So BLS International, even before yesterday, the stock had corrected from 430 to 330. And by yesterday, the stock was at 260. So that was a pretty large correction in terms of quantum. And we've recovered today. So overall, just a final bottom done for the short term. And going forward, dips back to 300, 310 would be a buying opportunity, would wait it out. Shriram Pistons, the stock is generally very illiquid. We saw some bit of block deals happen around that 1000 to 1250 mark. Then the stock had gone up to 1800, 1850. Yesterday was a dip, but overall a very illiquid stock. So would avoid as of now as a trade. In terms of railway stocks, one has to be careful. This bounce is a good time to actually keep reducing any further rally of another 10-15% on those names. Should actually be used to reduce allocations over there. I think we would be getting into a sideways consolidation of a major band for most of the railway stocks. Do not expect them to make new all-time highs.
Deepak, last 3 days in this accelerated fall, are there any names which coming on your radar you felt like nibbling into? If you could share some themes or at least names.
There'll always be names. We're continuing to be buyers. We've been buyers, I mean, small quantities, not much cash. So as new inflows come, we continue to buy. But on an algorithmic portfolio, that will be primarily determined by the data that is thrown out by the algorithm, and something like momentum, of course, does not result in too many buys right now, simply because there is no momentum in the market, or there is very little momentum in the market. Uh, but if you look at the fundamental part of the portfolio, I think a lot of our stocks have gotten cheaper, and therefore allocations can be put back into them. We were buying slowly. Now we can accelerate a little bit more of the purchases, regardless of where some of the stocks in the defense, even in the railway sector, even in the travel technology sector. We have a few stocks. I'm not naming them right now because we continue to be adding positions there. I think there is a lot of scope, because even though the prices had run up in the past, I don't look at that as the reason for fear, because I think longer term, if you've got a big runway and you can be at 10x from here, whether the price is 20% up or low, it's not going to make a major amount of difference to a long-term purchase. What matters more is how much money you can allocate, not exactly what price you can, whether it's 15-20% up or down. So in that context, a lot of stocks have become cheaper for us, so we're continuing to buy. I haven't added anything new significantly, at least not in the last 3 days. But we have taken some positions. There is also year-end tax based, selling or reconfiguration of taxes as well, which drives some transactions. But otherwise, very little out of the ordinary transactions in the last 3 days. To be fair, I don't think this is so big a fall that I should jump in joy and add more significantly. That means change the whole portfolio. But it's also not not a small fall, so it allows us to add some more of our existing position. So I've not done anything new in the last 3 days.
Actually, just the news breaking on Biocon, and that stock is reacting quite positively. So they are informing the exchanges that Biocon Biologics, a subsidiary of the company, has approved the transfer of the business in relation to its branded formulations business, inclusive of metabolics, oncology and critical care, to Eris Life Sciences on a slump sale basis. And the details that I'm getting is the total transaction value is 1,242 crore rupees, which is almost 3.5 times the revenue of that particular business and 18 times the EBITDA. As part of the deal, 430 employees associated with the business are expected to transition to Eris Life Sciences. Biocon Biologics has also signed a 10-year supply agreement with Eris as part of this particular deal, and the transaction is expected to come into effect before April 15, 2024 itself. So that's the latest news coming in. Of course, the management is also saying it's a strategic collaboration that they're doing with Eris. So even though they are looking at paring down their stake, because the company has been looking at getting the money out of some of the businesses to pare down their debt and fuel their growth expansion as well, they say they are committed to a successful transition. They are looking at, weaning out some of these portfolio as well. But the commercial strategy to maximize the patient reach and market potential is something that they stand with. And overall, I think 1,242 crores is probably a good sum given the revenue of this business for 412 crore. And this formed only a small part of the Biocon total business because it was only 4% of revenue of the consolidated entity. But they're getting the valuation of almost 1,200 crore there. So almost 3.5x the value of the revenue, 18 times EBITDA. So the stocks are reacting, Biocon getting the money, and getting money for them is something which is paramount.
That is actually the bigger point.
Yeah.
I mean, this is just going the way Glenmark actually did, selling stake in Glenmark Life, and the direction or the messaging the market will actually get is that the management is quite serious in paring the debt on the main company, even if it means back-to-back deals. The previous deals actually came in when Serum Institute invested money in their biologics arm. Then there was a PE deal, and now a transaction with, and this 1,200 crore which we are talking about, the proceeds of the lump sum, this formulation business sale, will actually come into the company. We'll probe the management tomorrow morning around it. But Sandeep, a quick view on Biocon, Deepak, a quick view on this this transaction or the kind of messaging market would read that the management is in parts trying to reduce debt in whatever manner, just the way from Glenmark went from 300 to 900 on similar transactions and commentary.
I haven't actually seen the contours
Okay.
of the deal, so it just came out, so I
Eris
don't have
also,
that much of a
we'll show
context.
both the
So,
stock. But show both
well,
the
I don't know
stocks
what
and say
1,200
why
crores
stuck on
means
Biocon.
to
Eris is
the
also
bottom line
listed,
and
show
to
that too.
Fair, no point, no problem. What's your take on any of these large pharma companies today? Even Aurobindo Pharma commentary coming in saying that the generic business in US is improving and many of the key drugs are doing very well, almost going on the verge of saying that this quarter could be a very good one, which we are walking in right now.
it could be. I think this is for pharma. This is going to be probably a return quarter after a long period of relatively. So we've had an issue with a number of things in terms of, the one big problem that we haven't had in the last 2 years has been the FDA coming in and doing a lot of warning letters and stuff like that, which I think is really the regulatory risk is in the future there, especially for pharma companies that are selling in the US. That may be one of the issues that will bog them down. Otherwise, it's been a long time. They've kind of been subdued in terms of performance in the stock markets. We've seen some revival, Sun Pharma, for instance, and a couple of other stocks as well. So I think interest in the space is starting to build up. I would personally wait another quarter or two. So if this is their quarter, let them show it in their numbers, and then maybe then I'll come back into it. So
Okay.
looking at FDA action as the only negative here.
FDA action, yes, and that's the black box that we don't know what is going to happen. But Kunal, tell us on the charts of Biocon and Eris Life, because both stocks are reacting to the news flow. What's the take? Would you be buyer after this sharp rally? Do you think it can extend further tomorrow?
Yeah, Biocon is something which I've been bullish on earlier, even though the stock had earlier shown signs of rally from 270 to 295, 305, and then even this leg of correction. I would believe after this price action move which you're seeing today, the volume is making a late comeback for the stock. I think this could be a very strong sign that this 240 to 50 mark, which was tested yesterday for Biocon, could be a good formidable support for the stock over the very near term. I think traders should look at buying the stock at current levels, and I believe that this 240 to 45 base could be taken as a stop loss for this trade, and on the upside, we should be looking at 305 as an immediate target.
Okay, so that's about Biocon, but can we please bring up the chart of Eris as well, because that too is reacting positively. So yes, Biocon is getting 1,200 crore rupees, but Eris is the company which is paying that, and they are getting that portfolio. In fact, to divulge further and get more details, let's take it across to Shrishti. Shrishti, help us understand the significance of 1,200 crores for Biocon, what Eris Life will get out of this, and overall for these companies, what really is the growth trajectory expected going forward as well?
Well, yes, so Biocon Biologics, which is a subsidiary of Biocon Limited, that is transferring a part of their business to Eris Life Sciences, where the deal value is actually of 1,200 crores, and this will be on a slump sale basis, wherein Biocon Biologics will transfer the business of their branded formulations in India, comprising metabolics, oncology, and critical care diagnostics to Eris Life Sciences on a slump sale basis. What they have said that the total transaction value is 1,243 crores, and they have signed a 10-year supply agreement with Eris as well as a part of this deal. Now with this collaboration, they will expand the patient's access to different geographies as well, and this is indeed positive for Biocon, because this transaction value is representing 3.4x of the revenues, and it's at 18 times of the EBITDA, and 400 people associated with the business will also have a transition to Eris Life Sciences, and this is the collaboration that both of these companies have done. So decent news coming in for Biocon, where they are transferring their business at a good value, and for Eris Life Sciences, we have to look out for the synergies. Back to you.
See, any more sense on the valuations in the kind of the recent deals that have been done in the sector? Is 3.4x of revenue a good multiple to get, 18 times EBITDA? And also, what's the overall debt pile of Biocon at the moment? Because is 1,200 crores substantial enough to warrant a 7 to 8% move?
So actually the news is actually positive. If you talk about the valuations don't look that cheap. but they don't look that attractive as well. So a decent valuation for this particular business is what the company has given, and of course the management is positive and happy about it, where Shreyas Tambe has said that this collaboration will with Eris Life Sciences will align their commercial strategy to actually grow their India business, maximize the patient reach, and in terms of the valuations as well, a decent valuation coming in for Biocon Biologics. This strategy was actually told by the management earlier as well, and now they are seen to be working on those lines.
Just taking a look at the details in terms of the overall borrowings of, Biocon at this point of time. The borrowings were around 18,000 odd crores as of September, and the other liabilities were 17,000 odd crores. So 18,000 crore in context of that, 1,200 crores is not material. But I think what the street is liking is they're walking the talk, because they have been talking about, paring down the non-core and non-strategic assets to, pare down the debt, and that's exactly what is happening. But shifting focus away from Biocon now, because there are a lot of other segments of the markets which are also participating right now. Take a look at Yes Bank. There seems to be a clarification that has come out from the bank as well, because in the morning there were some reports doing around that the company might be looking at selling 51% stake and changing the promoter. That is probably getting clarified by the bank on the exchanges as well. But, Sandeep, what's your take on these second level, third level private sector banks? Federal Bank and South Indian Bank came under the radar on account of those co-branded credit cards which RBI has stopped. Yes Bank is in the news flow. Would you be a buyer in any of these names for a big, alpha generation?
Would that be for me?
Yes, Deepak.
Yeah. So I think Yes Bank, the fact that it is going to be sold is probably longer term good for it, but short term it will create a lot of drain in terms of liquidity. It was not just SBI, it was SBI, LIC, and a bunch of other public sector banks that have given money to it. And I think Kotak has already sold most of its stake, and a bunch of others have still got stake. So once we've got clarity on who the next owner is, then we might see where the bank goes from here. But it's not going to be easy, because it's going to need RBI permission, a bunch of others, and possibly an open offer as well, considering that 51% or 49% at least is going to be sold eventually. So that, I think, is an off case. For Federal and South Indian, Federal has actually become a layer that offers a lot of banking services to the fintech sector. A lot of fintech organizations are using them as a conduit to help their customers get access to banking services. Long-term positive for Federal. Short-term, there will be some issues, because some of the startups have been doing activities that RBI does not like or does not want to grow meaningfully. For instance, personal loans or lending to relatively small ticket retail loans. Without the card frameworks, of course, the card frameworks are still okay. So I still think there's a lot of scope here for long-term appreciation in Federal. We don't have a position, because we want to wait till the regulatory situation just clears up a little more. But I think that can be their alpha generation. I don't have a view on South Indian. I haven't done much of an analysis on that. But in general, I would say Federal's attractive because of its tech focus. Yes Bank's interesting because of this new ownership that might come in. We'll take more view as more data comes in.
Okay, point taken on some of those private banks. But Deepak, I want to do a channel check with you. How acute is the water shortage in Bangalore? Because CLSA wrote a note this morning talking about how the entire construction could get delayed. The likes of Prestige, etc., are coming under pressure today. I don't know if people are making too much of it, or is the water shortage really that acute in Bangalore right now?
Fair, we don't see it. I don't see it. I live in one part of Bangalore, and maybe because of the area we live in is continuing to get water, we don't seem to have an issue. Everybody is, of course, conserving it as much as they can. We've got notices saying, please don't go overboard in watering your balconies. So please use a mop instead. And so all of that stuff is happening. I think that's good in general. It's great to to save water, to save potable water. Most apartments in Bangalore have to have sewage treatment plants, so they all use it, use recycled water in the bathrooms and so on. So there is that in the flushes. But I think the more important point over here is to notice I think there was a person from the meteorological department and the Bangalore water supply department who said that we are adequately supplied till the monsoon. So this may be a little bit of a creation of some apartments having an issue, and then that's being translated to all of Bangalore. If you've been in Bangalore long enough, you get this issue once or twice, every 2 or 3 years, and then things just kind of pass afterwards. There are some parts of Karnataka that simply don't have water. This is the northern part. They've faced water problem for years. So Bangalore having that is not surprising. It used to be the case even much earlier, a decade earlier, and so on. I would say at this point, yes, this has been a crueler summer than most in the last maybe 5 or 6 years. It's much hotter than it used to be. So conservation of water is necessary, and I hope that monsoons come in early, which typically happens also, and then the reservoirs are back to full. I don't see this as a problem that will stop economic activity. It could, of course, I think the efforts to conserve water may require that some builders may have to slow down activity for a while, but I don't expect this to take more than 1 or 2 months.
Okay, so not a big issue that you should see a 5% cut perhaps on Prestige. Even Brigade is down around 1.5%. I would have loved to take in more views from you, Deepak, but short of time today. So thank you so much for joining us.
If you like this video, then like, share and subscribe to ET Now.